when a teenager downloads Robinhood, what they're really downloading isn't a trading app. It's a carefully engineered psychological trap, a system that makes tapping a green button feel like building wealth, when in truth, it's gambling dressed up as democratizing finance. On the surface, it's a triumph, a slick product that forced the old guard to copy zero commissions, rocketed into the S&P 500 in 2025, and swelled to tens of millions of accounts, a $120 billion giant that turned markets into something you can do between texts and takeaway. But behind the shiny interface and friendly confetti, there's a harder truth. Two idealistic Stanford mathematicians set out to level the field, then built the perfect dopamine machine. The house doesn't charge you at the door. It quietly sells your orders upstream and nudges you toward more trades, more risk, more one-tap bravado. Robinhood became a symbol of a new generation, money as entertainment, risk as identity, capable of moving markets, crashing under stress, and summoning congressional hearings when the music stops. It's a story about access without understanding, and what happens when the casino fits in your pocket. This is the insane, true story of Robinhood, how a utopian promise to empower everyone morphed into the most addictive finance product of the smartphone age. And it begins with a so-called revolution that was never really free. Do me a favor, tap subscribe so you don't miss the rest of this wonderfully ridiculous tale of innovation and mayhem. Right then. Before Robinhood became the neon green casino of modern finance, it was just a crazy idea shared between two clever Stanford lads who thought they could fix Wall Street. It all started with Vlad Tenev, a Bulgarian immigrant whose parents were World Bank economists. They'd moved to America in search of a better life, and their son absorbed every lesson about money, power, and systems. Vlad wasn't just smart, he was mathematical to the point of obsession, an engineer who believed the right equation could make anything fair. At Stanford, he met Baiju Bhatt, a wild-haired physics student who dressed like he was auditioning for a surf band, but could code like a Wall Street quant. The two became inseparable, mates in the truest Silicon Valley sense. They shared a dorm, a dream, and a deep irritation with how traditional finance worked. In 2010, while everyone else was playing Angry Birds, Vlad and Baiju were building high-frequency trading software for billion-dollar hedge funds. They watched orders fly across screens in microseconds. Speed, precision, profit. It was thrilling, until they realized who the system really served. All that technology, all that brilliance, and still, the average person was being charged $10 just to buy a single share. And that's when the idea struck. What if we built an app that let anyone trade for free? A mad thought, but the kind Silicon Valley adores. They named it Robinhood, after the outlaw who stole from the rich and gave to the poor. The symbolism was perfect. The irony would come later. Their mission was bold: democratize finance for all. They didn't want charts, jargon, or any of that suit and tie nonsense. They wanted something a 19-year-old could open on a phone and understand in 10 seconds. So they stripped everything away. One screen, one button, one core action: buy, sell, done. Investors loved it. The story sold itself. A couple of Stanford whiz kids giving Wall Street the middle finger. Who wouldn't want in? Funding poured from every direction. Index ventures, Google, even rappers like Snoop Dogg and Nas. By 2019, Robinhood had raised nearly $1 billion, was valued at $7.6 billion, and had fewer than 500 employees. But their free trading promise wasn't free at all. Behind the curtain, Robinhood made money through payment for order flow, selling its users' trades to giant firms like Citadel Securities, who executed them and paid Robinhood for the privilege. Every tap, every swipe, every bit of user excitement quietly monetized by the same institutions the founders claimed to be rebelling against. Still, no one cared. The branding was too good, the design too sleek. Young people weren't reading financial statements. They were chasing the thrill of participation. Owning Tesla shares felt like owning the future. Buying Bitcoin felt like rebellion. By 2015, Robinhood had 500,000 users. By 2018, millions more. By 2020, it was a cultural movement. The app had transformed the stock market from an intimidating system into something playful and addictive. It was finance reimagined as a game, and the founders were about to learn what happens when you make gambling look like empowerment. Because just over the horizon, an army of young traders was preparing to push their shiny new app to its breaking point. And when that happened, even Robinhood's own creators would realize they'd built something far more dangerous than they ever intended. Democratizing finance, they called it. Wonderful. That's what they always say before it explodes. It's January 2021, and the stock market looks less like an orderly exchange of value and more like a carnival on fire. At the center of it all sits a forgotten video game retailer called GameStop, a crowd of Reddit traders waving virtual pitchforks, and of course, Robinhood, the little green app that gave everyone a slingshot. It began as internet theater. Thousands of users on r/Wall Street bets discovered hedge funds were betting billions on GameStop's failure. To them, this wasn't finance. It was revenge. They began buying up shares like mad, posting memes, chanting slogans. Diamond hands! Hold the line! They weren't just investors. They were soldiers in a digital uprising. Robinhood made it effortless. Open the app, press one button. Boom. Ownership. The chart goes vertical. And suddenly, every bored college kid feels like Gordon Gekko. In a matter of days, GameStop's price went from $20 to over $400. Hedge funds lost billions. And Robinhood, it was everywhere. The people's broker, the hero of the rebellion. Until, quite suddenly, it wasn't. On the morning of January 28th, the unthinkable happened. Users woke up to chaos. The app wasn't letting them buy more GameStop shares. A simple gray message appeared. You can only sell. And just like that, the rebellion was over. The same app that claimed to steal from the rich and give to the poor had just pulled the plug, and millions felt robbed. The outrage was colossal. Social media exploded. Elon Musk tweeted, WTF. Congress called emergency hearings. Users accused Robinhood of protecting hedge funds at the expense of ordinary people. And for a moment, it really did look like the revolution had been rigged. But behind the scenes, the truth was more boring and far more terrifying. You see, every brokerage must post collateral to clearinghouses to guarantee trades. During the GameStop frenzy, those requirements skyrocketed overnight. Billions in cash demanded within hours. Robinhood simply didn't have it. So, Vlad Tenev hit the kill switch. Trading halted, panic erupted, and the myth of free trading died that day. The backlash was brutal. Users deleted the app in droves. Lawsuits piled up. The company was fined $70 million for misleading customers. Vlad was dragged before Congress, sweating under the lights, insisting it was all a liquidity issue. But the internet never forgets. To millions, Robinhood would forever be the app that betrayed the people. Yet, in an almost absurd twist, that same controversy made the company more popular than ever. New downloads exploded. Millions of fresh accounts appeared. Everyone wanted to join the chaos, if only to watch the next explosion. By mid-2021, Robinhood had more than 20 million users, and in July, despite everything, it went public with a $32 billion IPO. The anti-Wall Street app had officially joined Wall Street. It was the perfect irony. The company that claimed to disrupt the system had now become a pillar of it, and the same young traders who felt betrayed by Robinhood bought its stock anyway. Because deep down, they didn't care about betrayal. They cared about the rush, and Robinhood gave it to them better than anyone. By the end of that year, the dust had settled, but something fundamental had changed. Millions of ordinary people had felt, for the first time, what real market power was like, and how quickly it could be taken away. Robinhood had become a cultural phenomenon, part financial tool, part entertainment app, part public enemy. And the founders, once hailed as liberators, were now learning an uncomfortable truth. When you democratize risk, chaos votes too. They wanted to give power to the people. Congratulations, lads. Now no one's in charge. You'd think that after igniting a global scandal and getting hauled in front of Congress, most companies might lie low for a while. But this is Silicon Valley we're talking about. Failure isn't a scar, it's a badge of honor. So instead of retreating, Vlad Tenev doubled down. Robinhood's motto had been bruised, its reputation shot to pieces. But in the chaos, something interesting happened. The world couldn't stop watching. The name Robinhood was everywhere, on the news, in memes, in angry rants and finance podcasts alike. And in the modern age, attention is currency. So Vlad decided to spend it. He started rebuilding the company from the ashes of that catastrophe, promising bigger, better, smarter things. The idea of a simple trading app was dead. The new Robinhood would be a financial super app, a one-stop shop for all things money. First came crypto, which had quietly launched in 2018, but exploded after GameStop. Bitcoin, Ethereum, Dogecoin, each available with the same one-tap simplicity that made stocks addictive. By 2020, Robinhood's crypto revenue had gone from background noise to a deafening roar. Then came wallets, staking, and even new coins like $Aster in 2025. It wasn't just a brokerage anymore, it was the front door to every risky corner of finance. Next up, Robinhood Gold, the company's first big push into subscriptions. For a small monthly fee, users got access to margin loans, research, and faster transfers. In theory, it was a way for serious traders to get premium tools. In reality, it was a clever way to turn free users into a steady, predictable income stream. By mid-2025, Gold had 3.5 million subscribers, quietly generating hundreds of millions a year. Then came Robinhood Banking, a full suite of checking and savings accounts with shiny debit cards to match. It was a logical move. Why stop at trades when you can hold everyone's paychecks too? Now, Robinhood wasn't just where you played the market. It was where you stored your cash, paid your bills, and earned interest. By the first half of 2025, the numbers were staggering. Revenue hit $989 million in quarter two, up 45% year over year. Net income soared to $336 million, up 114%. And when Robinhood joined the S&P 500 in September 2025, its stock had already surged nearly 300% that year. Short sellers, those brave souls betting against it, lost $3.5 billion trying to predict its demise. And the founders, they were no longer underdogs. They were industry titans. Baiju Bhatt stepped back from co-CEO duties to chase new ventures like Etherflux, a company beaming solar power from space. Meanwhile, Vlad Tenev became the face of a new kind of financial empire, lean, algorithmic, and unapologetically bold. Robinhood was now worth more than some of the banks it once mocked. Its slick green screens were the new branches of modern finance, open 24/7 and humming with human impulse. But here's the thing about reinvention. It never comes without risk. To keep investors happy, Robinhood kept pushing for more assets, more engagement, more reasons to stay inside the app. And that's when they added prediction markets, an entirely new arena where users could bet on the outcomes of real-world events, elections, tariffs, even central bank decisions. Suddenly, everything was tradable. To some, it was genius. To others, it was the moment Robinhood officially crossed from finance into gambling at scale. Even so, the press loved it. Analysts bumped price targets to $140, even $160 a share, and hailed Robinhood as the next fintech juggernaut. The more controversial it became, the higher the stock climbed. In the old days, a scandal could ruin you. These days, it just boosts your valuation. Progress, they call it. By late 2025, Robinhood had everything a company could dream of: fame, profits, growth, and an almost religious following among young investors. But the foundation beneath all that glitter was as fragile as ever. Because when your business depends on people trading constantly, you don't build wealth, you build volatility. The only thing more addictive than making money is almost making it. And Robinhood was quietly engineering both. Still, Vlad pressed on, chasing the grandest version of his dream. He didn't just want to disrupt Wall Street, he wanted to replace it. A super app for finance, he called it. But the old cynical part of me, the one that's seen a dozen Revolutions come and go. Can't help but wonder. When you make the casino look this inviting, does anyone really walk away richer? Ah yes, the super app. Because what the world really needed was a faster way to lose money from multiple accounts at once. By late 2025, Robinhood had reached a level of power even its founders couldn't have imagined. A decade earlier, it was just two idealists with a laptop and a dream. Now it was a $120 billion empire, proudly sitting in the S&P 500, its app installed on the phones of 24 million people. It had survived a congressional hearing, a public outrage, and a dozen lawsuits that would have sunk lesser firms. In Silicon Valley, that sort of endurance isn't luck, it's worshipped. But beneath the surface, the same cracks that once shook it were beginning to widen again. It started, as these things often do, with a crash, not of the market, of the system itself. October 2025, volatility spiked, crypto prices went berserk, and millions of users logged into Robinhood all at once. And then, without warning, everything stopped. Trades failed, charts froze, balances disappeared into thin air. In minutes, the internet erupted. Here we go again, people said. Some blamed Citadel. Others said it was rigged. For users, it was GameStop all over again. The same helplessness, the same disbelief, the same gnawing feeling that the house always wins. The company blamed unprecedented market activity. But let's be honest, when an app worth billions can't handle its own traffic, it does make you wonder whether they spent more time engineering dopamine than infrastructure. And yet, in an almost absurd twist, the outage barely slowed them down. The next day, the app was back online, the markets resumed, and new users poured in faster than before. Robinhood's stock even ticked higher. Scandal, it seemed, was now part of the business model, as Wall Street analysts raised their targets, some saying the shares could hit $160. The pattern became obvious. Every controversy only made the company stronger. Every outrage turned into free advertising. In another era, shame might have destroyed a company. In this one, it was just another form of engagement, but success had quietly changed the company's soul. Robinhood wasn't trying to educate anyone anymore. It was trying to stimulate them. Each new product, from prediction markets to AI trading assistants, made it easier to keep users inside the loop. People weren't investing. They were spinning a wheel that never stopped. And that wheel was Robinhood's real invention, a perpetual motion machine powered by human impulse. Prediction markets were the most audacious step yet. Users could now bet on elections, inflation, even sports. The company framed it as democratizing access to speculation, which is a charming way to say, we've found a new way to monetize your curiosity. When you can gamble on government policy from your phone, it's hard to tell where finance ends and entertainment begins. By now, Vlad Tenev had become the philosopher king of fintech. He spoke of AI co-pilots for finance, tokenizing assets, empowering generations. And to be fair, he meant it. But the uncomfortable truth is that Robinhood's true innovation wasn't financial. It was psychological. They'd turned the act of risking money into something people enjoyed. Every win felt personal. Every loss felt like learning. And before long, millions were convinced they weren't gambling. They were evolving. The brilliance of it all was infuriating. Robinhood hadn't built a trading platform. It had built an ecosystem of self-inflicted chaos, one that dressed danger up as opportunity. And yet, it's difficult not to admire the engineering of it. They'd managed to bottle greed, optimism, and fear into an interface so elegant you barely noticed what it was doing to you. If that isn't progress, I don't know what is, though it does make one long for the days when you had to drive to a casino to lose your money. So here we are. Robinhood didn't destroy Wall Street. It joined it, digitized it, and put it in your pocket. It promised freedom, and it delivered access. It just never mentioned that access and addiction look almost identical when viewed on a small enough screen. And that, I suppose, is the reckoning. A revolution built to empower the people ended up teaching them how to trade their peace of mind for the thrill of a chart that moves. It's clever, it's terrifying, and it's very, very modern. Right then, subscribe before someone figures out how to charge a fee for that too. Bah, humbug.